At this juncture, please join me in welcoming on stage Mr. T.K. Ramachandran, Secretary. Thank you. Marching forward, we have an esteemed set of dignitaries with us here today. Please join me in welcoming the Additional Secretary, Ministry of Ports, Shipping and Waterways, Mr. Rajesh Kumar Sinha on the dais. Welcome, sir. Mr. Gopal Krishna, former Secretary, Ministry of Ports, Shipping and Waterways, Government of India. Welcome, sir. Justice Shri Hemant Gupta, former Judge, Supreme Court of India and Chairperson, India International Arbitration Center. Mr. K. Raja Raman, Chairperson, International Financial Services Centers Authority. We welcome you, sir. Mr. Nick Shaw, Chief Executive Officer, International Group of P&I Clubs, London. Mr. Chong Yi Leong, Deputy Chairman, Singapore International Arbitration Center, Singapore. Welcome, sir. Mr. Regis Case, Managing Partner, Arrow Capital, Switzerland. Mr. Savraj Mehta, Chief Commercial Officer, North Standard P&I Club, London. Mr. Vinod Giri, Managing Partner, National Investment and Infrastructure Fund Limited. And lastly, the co-convener of the session, Mr. Madhavendra Singh, CEO, Gujarat Maritime Cluster. At this juncture, since we have all the dignitaries and the Honorable Minister on the dais, I request all of you to please rise for a group photograph. A truly pivotal moment of this session, ladies and gentlemen. Thank you very much, ma'am, and all the dignitaries on the dais. With that being said, please join me in welcoming Mr. Rajesh Kumar Sinha, Additional Secretary, Ministry of Ports, Shipping and Waterways, Government of India, to set the welcome address.
Good afternoon, everyone. Esteemed ladies and gentlemen, a warm welcome to this session with distinguished experts, luminaries, and stakeholders in the maritime finance, insurance, and arbitration sectors. It is indeed a privilege for me to convene this session at the Global Maritime India Summit 2023. The session aims to engage in discussion with experts having vast global experience for application in the Indian context. This session holds the promise of illuminating insights and forging valuable connections in these crucial domains. Ladies and gentlemen, we have the august presence of our distinguished chair, Honorable Finance Minister of India, Srimati Nirmala Sitharaman Madam, whose vision and leadership have been instrumental in shaping the course of maritime finance in our nation. On behalf of this summit 2023 and all participants of this session, I warmly welcome respected Madam as chair of the session. I also welcome Secretary of the Ministry of Port, Shipping and Waterways, Shri Ramachandran sir, to the session. Our esteemed panel of experts include Mr. Gopal Krishna sir, Mr. K. Rajaraman sir, who have vast administrative experience as secretaries to Government of India. Retired Justice Hemant Gupta, retired from Supreme Court of India, now he is chairman of the India International Arbitration Center. Mr. Chong Yi Leong, they will give us the perspective of international arbitration. Mr. Nick Shaw and Mr. Savraj Mehta will bring in the rich experience of insurance and P&I clubs. And the session will receive from Mr. Regis Cage and Mr. Vinod Giri the wealth of knowledge and experience of financing the sector. The co-convener of this session is Mr. Madhavendra Singh, CEO of Gujarat Maritime Cluster, with vast experience of the sector and a great deal of enthusiasm. I warmly welcome all distinguished panelists to the session. I'll just touch upon the subject that will be discussed. The banks do not do asset-backed financing due to challenges with enforcement. The terms of credit where provided are also very small compared to the life of a ship. Ships and vessels themselves are not taken as infrastructure. Therefore, the infrastructure financing products in the market are not accessible to the ship owners. As ship owning is also minimum, their insurance cover required are not sufficient to cover the P&I risks, which will be covered in the session today. Another important point that the session will deliberate today is arbitration. As a means of dispute resolution, there could be other methods, but arbitration being the recognized method at the IMO. Due to pendency of cases in court, commercial men prefer their commercial disputes to be adjudicated in private ADR forums for final and binding decisions. These are the three critical aspects that need to be addressed for expansion of maritime industry in India and its progress. I hope you enjoy the deliberations ahead. As we together embark on this session, I invite all participants to share insights, engage in constructive discussion, and work towards innovative and workable solutions. Together, let us chart a course for a brighter and more prosperous future for the maritime sector in India. Thanks and welcome to all.
Thank you very much, sir, for setting the welcome note for this session. Ladies and gentlemen, it's a pivotal moment for this session at the day 3 of the Global Maritime India Summit. We have the august presence of the Honorable Minister, Srimati Nirmala Sitharamanji. Ma'am, your ministry has taken incredible steps and measures in enhancing the economic growth and thereby contributing to the nation building under your leadership. With that being said, ma'am, we'd love for you to take over the microphone and address us with a special note, ma'am. Thank you very much. Yes, ma'am, please.
Good afternoon, and let me express my happiness in being a part of this Maritime Investors Meet, which is running now for the second and the third day, I think. And to talk about issues which so matter for India's growth in this area, I commend the Minister, Sarvanand Sonowalji, and also his entire ministry for having taken this initiative. And I can see a lot of energy in the various halls where the discussions are happening. And I've been asked to participate in this particular forum, which talks about maritime financing, insurance, and arbitration. Whilst there's, as is for any politician standing before a mic, whilst there's just a lot of things to say, I'll try to focus on how in the last 9 years, the government under Prime Minister Modi has made a conscious attempt to focus on this area, the blue economy, maritime concerns for India, having ships with Indian flag, looking at training our manpower, because we have the youth which is revving to want to do a lot of things. They go outside the country to get themselves trained. We need to provide them the possible best training which they can acquire for being part of this global Sagarmala adventure which Government of India is supportive of. But if all this mark one side of the story, more important side is, what about the financing? What kind of a recognition do we give for this sector? And is it just shipping? Is it not port development? And so on. So I just want to highlight some of the main focus that this government has given in the last 9 years, so that before I really address the issue of financing, of looking at insurance, and also seeing where the future lies for us. We also have eminent judges, now heads of the Global Financial Services Center, which India is now actively promoting, and also those experienced in government decision and policy making. So in the last 9 years, I just want to highlight some of the main decisions which has brought our maritime and shipping and port sector onto the fore. It's not happened overnight. We've had a fairly laid back pre-2014 in this area. Now it's come up. And for the 9 years, what are the kind of things which I'll just draw a few to your attention. First of all, I don't want to sound cliched, but P to the power of 3 is what happened in the last 9 years. What do I mean by that? We've seen ports as a key to prosperity, a key to progress, and a key to productivity. And therefore, the port-led development approach saw all these 3 as the end of the objective, and therefore gave a lot of focus on developing ports. Enormous efforts have gone to upgrade our ports and make sure that they're up to the 21st century challenges. And a part of that was when Prime Minister was here during the inaugural speech, he mentioned about how India, Middle East, Europe economic corridor is the vision for India. We are looking at reaching Europe, reaching Central Asian republics through a maritime plus land route reaching, and therefore cutting down on logistics costs. So comparable to the earlier Silk routes, I would think, but that is the 21st century version which India wants to present before the world. And in that, I'm glad to say many of the Middle Eastern countries, Israel, which is unfortunately now in a bit of a terrorist problem, and further into Italy and Greece. So that kind of a vision is before us. 9 years ago, we started this port-led development, which is before us, and also together with the port development, also looked at inland waterways, looked at various maritime related policy and financial support. Now, if India, let us say between 2000 and 2023, where we are today, had received FDIs, foreign direct investments into India, for all those 23 years, 75% of all those FDIs which came between 2000 and 2023 happened in the last 9 years. I just want to highlight that, 75%. And what is that 75%? $4.2 billion happened in the last 9 years only. Total cargo handling capacity of Indian ports has doubled between 2014 and 23. It was just 1,400 million metric tons per annum, whereas now it is 2,600 million metric tons as of 23. Cargo volumes have also more than doubled. 74 million tons MTPAs in 2014-15 has gone, it's reached 74, whereas in 2014 it was only 71. Am I right? No, sorry, 74 in 2014-15, gone up to 151 now. The turnaround time, I take a bit of a satisfaction in saying this because we were initially working together with the WTO to understand trade facilitation in 2014, and at that time, after the discussions, we had taken a lot of steps towards improving the turnaround time in the ports. I wish to linger on this for a moment. World Bank's logistics performance index report of 2023 says that the turnaround time of Indian ports is now 0.9 days, which is better than Singapore, which is 1 full day, UAE 1.1 days, Germany 1.3 days, USA 1.5 days, Australia 1.7 days, Russia 1.8 days, and South Africa 2.8 days. So since 2014 to today, a lot of work has happened to facilitate turnaround in the ports. And you're now seeing Indian ports at 0.9 days. India has also risen in the global ranking of international shipment category from 44th rank in 2014 to 23rd rank in 2023. So India's overall rank in World Bank's Logistics Performance Index has also increased from 54th in 2014 to 38th in 2023. Of course, a long way to go even to perform even better, but there is in the last 9 years, absolute performance improvement that is showing. Our indigenously built, I don't know if there are people from Defense Ministry here, Navy here particularly. Our indigenously built aircraft carrier, INS Vikrant, is a proof that India's shipbuilding capacity has absolutely world-class facilities and skilled manpower. So I just want to be sure that the audience is seized of these core facts which have shown us the results as a result of policy interventions, encouragement, support given by the government in the last 9 years. Now, if I come to this point of financing and policy initiatives, I know even as we were walking up to this hall, Secretary was telling me that shipping is not considered to be an industry in India. The status industry, if given by government, meets a lot of expectation. I think it's more psychological, but psychological it is important. There can be a lot of people who will say, no, not psychological. Banks won't touch us unless you give us industry status. Today, banks are also a lot more dynamic, and they don't wait for labels, but I see the point. To enhance private participation in the maritime sector, financing will play a key role in attracting public-private partnership. I give it its full play. And in order that we become Atmanirbhar, because we have everything in piecemeal. If you look at, we have the manpower, we have the technical skills, we also have some kind of a, I'm saying rudimentary, but not maybe as rudimentary would define itself, some kind of a shipping capacity, but shipbuilding and submarine building capacities have matured. So we need to have financing and insurance and arbitration and create more diverse options. I'm very glad that the people representing the arbitration, particularly from Singapore, are here. Most often our cases in the arbitration, when they go to Singapore, all of us are sitting here in India with our crossed fingers saying, how will our people handle it? Because when our case is being argued in most of the arbitration cases, we find that India's own barristers, qualified jurists, or people from our bar are not there. They are only helping people who can stand before the arbitration courts who are not Indians. I have no problem, because professionalism is important and it excels itself wherever and from wherever they come from. But most often India's problems, which are unique to its let's say jurisprudence or the way in which Indian systems work, are less put forward for their consideration in the arbitration courts. I have seen a few cases, and therefore this is not a Government of India opinion, but an opinion nevertheless I would put forward here, because the way in which we link with the arbitration courts has also got to be improved a lot so that it meets the standards with which we can argue our case. This conference has also one very important dimension, and that is it's being held at a time when globally there is a lot of challenge. There is a lot of challenge from the point of view of insecurities of supply, disruption in supply, value chains being broken, and how is it that this is the case which I can clearly say most of us recognized even immediately after COVID. supply chain disruptions, containers not being available, and after a point, the disruptions were so unpredictable that we could not plan anything for our industry. So, shipments of major commodities are at risk sometime. Food insecurity, energy insecurity, all creep in because of it, add to inflation. So even economies which are coming out of COVID are still facing these challenges. So this global maritime conference happening at this juncture holds a lot of relevance, and I again appreciate the Minister for having taken this initiative at this time. To support the maritime trade in this aftermath, a marine cargo pool was created to support, with the support of the insurance regulator, IRDAI, and domestic insurance companies, insurers together with the General Insurance Corporation of India, that is more for underwriting and so on. The General Insurance Corporation of India is also into this. So I'm not sure how effective that marine cargo pool has been, and it might be useful if any of the participants in these discussions also give their experience about that. In order to support growth avenues, particularly in India's blue economy, with maritime reinsurance and entice a great number of reinsurers into India, the Insurance Regulatory Development Authority has approved a series of modifications in the reinsurance sector. And I'm sure there are people here who will be able to elaborate on it, and that could also be fodder for thought on what can be done further. But I also feel a need has been felt to have a full-fledged India-owned and India-based protection and indemnity entity, the P&I entity, which is so important. I would think it is important to have a P&I of India's own ownership. And that, I would think, will be one of the very useful suggestion, if at all it comes, for the ministry to take it forward. What would that do to us? It would reduce India's vulnerability to international sanctions and pressures to provide greater strategic flexibility in the shipping operations. It will also provide protection of liabilities to the ships operating in coastal waters as well as inland waters during their operation. And it will also provide a foothold into the specialized segments of protection and indemnity business, which is currently dominated by very few players internationally, where presently India doesn't have a presence. I would think that is a very important thing which we need to work on. And also, the Indian protection and indemnity services can also help in encouraging and increasing maritime arbitrations in India. India, of course, you know, has passed an arbitration bill. We've got an arbitration center. We are now improving our strength in arbitration, and therefore to have arbitrations also happen in India. Most arbitrations now are carried on in Singapore or in United Kingdom. So no harm in that, but for a country as our size, for a coastline that we have, for the potential in maritime activities that we do have, at least we should start with an arbitration center in India so that our disputes are redressed here. We may eventually, for some reason or the other, still go to UK or still go to Singapore, but we should have an arbitration center here. Now, the financing bit. The cleaning up of the financial sector, which is a very domestic problem that we had. Our banks went through a very difficult time. Both the industry, companies, corporate sector, and also the government and the banks' balance sheets were all in difficulty when we came into power, when Prime Minister Modi took charge in 2014. We were called a fragile country, and we had a double balance sheet problem, where corporate sector was having a problem, similarly in their balance sheet, and similarly, banks were having a problem. They had to be reconciled. Several decisions were taken. Toxic assets were all moved out of the bank. They are now being bought by companies which can, rearrange them and then get them the bad bank idea and so on. So now after that, banks and financial institutions have become better and are in a position to do more activities. So they have now become the important source of financing support for ship financing area, ports and shipyard and so on. There's also the establishment of something called a Sarod Ports, Society for Affordable Redressal of Dispute, ports related, as an alternative dispute resolution. But I will take on one aspect much more with Mr. Rajaram being here. He's the head of the GIFT City, IFSC, the Financial Services Center. So the International Financial Services Center Authority, IFSCA, located in the GIFT City, notified ship lease as a financial product. So we started on this point of, give recognition for maritime, for the ships and so on, the industry status. IFSCA has already done that. And it's also provided a framework for enabling ship finance and operating leases through framework for ship leasing. Various tax incentives are also, and exemptions are also provided for ship leasing entities in the IFSC, including tax holiday for 10 years, no capital gains during tax holiday, stamp duty exemption for 5 years. Additional exemptions have also been granted on income generated by way of royalty or interest paid on account of lease of ships. No capital gains tax at all in the IFSC. On transfer of ships by a IFSC unit enjoying 100% tax exemption. So that can really develop as a haven for ship leasing. Government of India also in our budget in 2022 established, which I referred to for a minute ago, International Arbitration Center in the GIFT City. So faster dispute resolutions can be expected. There was this concern which was being expressed. I'm seized of that matter, but I would put it here. An expert committee has also been constituted to relook at the harmonized master list. And that would streamline, once the findings come, it will streamline the understanding of infrastructure. The framework being developed by this committee would be instrumental in updating the HML list from time to time, not wait for another committee, but the framework will give the idea of how periodically you can go about changing and categorizing relevant sectors as infrastructure itself. So time won't be lost, it can be done at a good speed. So with all this, the financing part of it is something with which I would want the banks to work together with the shipping ministry. I'll certainly be saying it here, but I'll certainly be working together with Indian public sector banks, first to start with, and then with the others, the private sector as well, and the foreign banks as well, with the shipping ministry, so that banks understand and tell us where the glitches are. Why are they not willing to come forward? Is the risk higher than what they can digest, or any other issue? So now standing here, I just want to make sure that this is heard by all, that we shall work with the banks and with the shipping ministry to make sure banks understand the need of the sector and deal with it, not waiting for the categorization, because today our banks are in a position to take big ticket credit extensions. So one last point on how this sector can also look at funding itself, and that's very important. I think of the 12 major ports, in 9 of them, at least 31 different projects on asset monetization has already been identified and approved. It's part of the asset monetization exercise. I would think the ministry should go speedily on it so that those 35 projects can get monetized. They are part of the national monetization pipeline, and that is expected to give an estimated 14,483 crores, which itself can come of great help. So it was good enough to put it into the pipeline, but we'll need to act on it so that there's greater money in the hand of the authorities concerned. So the policy, the Maritime India Vision policy, is something which I'm sure the ministry will speak about. I don't want to take more time, the panelists will have to speak, but surely the performance of the last 9 years, the attraction for investment which has happened, the ease of doing business with which we are making it possible for maritime sector to take up, the cruise which is being planned for the west coast and the east, linking of Sri Lanka with a vessel going from Nagapattinam to Kanakeshanturai, more to come also in the southern coast. There's immense possibility. Financing and insurance. In fact, insurance is not something new to us. I don't want to go back to talk in great details, but Arthashastra also mentions about insurance. May not use the Hindi word bima for it. It had a collective pool collected for emergencies like fire or any disaster, so that that money can be shared. So ideas of insurance had existed in India, but today our model is completely dependent on the British model, and that is why everything that we do links up with Lloyd's of the world. So I would want some more looking at from the point of view of insurance capabilities that lie in India, insurance risks that are typical to this Indian peninsula, and also looking at flags or flag-bearing vessels of India, which are few and far between now. If we increase it, what kind of insurance and risks taking that we need to have. Thoughts to go on these points as well, so that we know where we are moving forward in taking the insurance sector, particularly for the maritime insurance, forward. So thank you very much for having me here. A lot of discussion points.
Our sincere thanks to Honorable Minister for those words of encouragement. Thank you, ma'am, for your leadership and for always taking India forward, ma'am. With that being said, let's jump right in to the context setting for the discussion. For that, I'd like to invite Mr. Madhavendra Singh, CEO, Gujarat Maritime Cluster.
Honorable Minister of Finance for the Union of India, Srimati Nirmala Sitharaman, Secretary, Ministry of Port, Shipping and Waterways, Mr. T.K. Ramachandra, Additional Secretary, Minister of Port, Shipping and Waterways, Mr. Rajesh Kumar Sinha, eminent speakers, distinguished guests, and dear friends. Madam Minister, pardon me saying this, you talked about you feel a lot of energy, but I must say you are a prolific crowd puller, because all the halls are actually overflowing now. There's so much of crowd who want to attend your session actually. Thank you. A picture is worth 1,000 words. However, a picture is incomplete without a context. Context weaves a narrative that breathes life into the visual story. David Macaulay, who is highly regarded for his ability to explain intricate concepts and structures in a visually engaging and understandable manner, said, that trade may be the lifeblood of nations, but it's the ships that keep the blood flowing, thus emphasizing the crucial role played by the ships. Maritime trade serves as the stabilizing anchor, holding fast against the turbulent currents of disruption in a world rife with cascading crises. India's robust logistical foundation positions it to embark on a journey of economic advancement through maritime activities. However, realizing the sector's full potential necessitates concerted efforts to strengthen maritime finance, particularly given the relative low tonnage of India. Beyond mitigating high cost of logistics and high freight costs due to lack of competition, it is crucial to secure a substantial stake in the global maritime assets, promising enhanced investment returns. Achieving this goal requires equipping India's trade sector with effective tools for managing and mitigating these freight-related risks. Shipping finance is the anchor that keeps the maritime sector afloat. Insurance is the compass that guides it through turbulent waters, and arbitration is the lighthouse that ensures a safe passage through legal challenges. In this context, a strategic focus on critical elements like shipping finance, marine insurance, and maritime arbitration becomes imperative, contributing significantly to bolstering the competitiveness, efficiency of the shipping industry, and consequently, India's economic progress. I'm proud standing here today. Today is remarkable as it marks the beginning of a new and rewarding transformation in the shipping industry in India. Ship financing stands as a crucial pillar within the maritime industry, encompassing various facets, including shipping, port infrastructure, and shipyards. This importance arises from the capital-intensive nature of the shipping sector, where vessels represent a substantial portion of a company's assets. The complexity of the shipping industry and the absence of sophisticated financial instruments contribute to the specialized nature of ship financing. In this realm, vessel charter fees serve as the primary source of repayment, backed by collateral rooted in shipbuilding and charter agreements. Ship finance loans share similarities with project finance, utilizing ship mortgages, insurance policies, and valuation reports as collateral. Marine protection indemnity liability insurance is meticulously tailored to encompass a broad spectrum of maritime risks, encompassing aspects related to vessel operations, third-party cargo damage, and environmental concerns like oil spills. While the Indian market possesses the capability to underwrite most cargo and hull risks, ensuring large vessels, offshore ventures, port packages, and marine liabilities like P&I often prompts Indian insurers to seek expertise and capacity from reinsurers abroad. The growth of Indian tonnage is pivotal for the nation to establish itself as a maritime insurance hub such that they can pool in resources sufficient to meet their collective insurance requirements. The International Financial Services Center, located in Gift City as a regulator, is offering suitable fiscal and process frameworks to businesses and facilitating the establishment of an ecosystem for ship acquisition, financing, and leasing activities, and innovative insurance and reinsurance products duly supported by Gujarat Maritime Cluster. My heart warms today to state that how all the agencies like the Ministry of Port Shipping and Waterways, the Ministry of Finance, Director General of Shipping, IFSCA, and the GMC have all pulled together to bring these critical reforms in just previous 8 months to empower the SAFAL program. I take this opportunity to also acknowledge the support of my friends and stakeholders, and many of whom are actually sitting here. Thank you. When it comes to enforcement of contracts, the reports from Niti Aayog and the World Bank state that the litigation in India takes at an average 1,500 hours, 40% of the claim value, and the ease of doing business, or what we call as the enforcement ratings. I'm hopeful that we will be in the top 150 very soon. The alternate dispute resolution methods like arbitration and mediation play a crucial role in resolving commercial disputes in a cost and time-efficient manner, providing expert arbitrators certainty of the procedure, thus allowing companies to enjoy uninterrupted cash flows, confidentiality of trade, and long-lasting commercial relationships. Arbitral institutions can therefore play a crucial role in building an ecosystem of trust where commercial men can resolve their disputes without the anxiety or the litigative fatigue. Arbitration is a private and quasi-judicial mechanism for adjudication of commercial disputes, which provides a final and binding award that can be enforced globally based on reciprocity with countries that have ratified the New York Convention for recognition and enforcement of arbitral awards, which is suitable for the maritime industry given the international nature of it. Similarly, mediation also provides an efficient mechanism for resolving commercial disputes. India is in the process of enacting a robust mediation act in ratification of the Singapore Convention, and the settlement agreements that arise out of these mediation proceedings can also be enforced globally with the countries that are ratifying the Singapore Convention but without the need of reciprocity. With that narrative and without any further ado, I present to you a distinguished panel and we'll take the discussions forward. Madam Minister, may I have your permission to please do the proceedings? Yeah. Just one housekeeping announcement that we intend to take the questions towards the end. Unless someone has a pressing issue, he can just write a slop sheet and pass it on to me. So let me start with Mr. Cage. Not because you're sitting next to me, but because you have traveled all the way with a broken leg. So this is about financing. Ship financing is happening internationally. And I just want to understand from you that what are these financial instruments that the international banks are employing? And we have seen that since the financial crisis of 2008, there have been a whopping decrease of $130 billion in the shipping finance. And in fact, with that, the conventional banking has actually decreased, and there are new kind of funds that have emerged globally. So what is this financial instruments? What are these new funds that have emerged? How was the financing happening internationally earlier? And what does it imply for the Indian ship owners and the Indian banks?
Good afternoon, everyone. It's a pleasure to be here. Thank you for having me. I cannot walk very well, but I can talk. So we can all enjoy a little bit about the ship finance. I'd like to go back a little bit and to say that ship financing is a very Western kind of instrument. It's been done by the Western banks for so many years. And they've all gone through the cycles of shipping, which is a very volatile industry, right? We know that a ship can be worth $20 million and could be $50 million and could be $5 million. It's all a supply and demand equation. And all those banks in Europe and in the US, they have done it for so many years, but there is one point when they started not doing it anymore. And that's in 2008. And that crisis was the one that actually pulled many of those banks out of the market. I'm talking about the big corporate banks, the universal banks, as we call them. You used to go to one of those banks, ask for a shipping loan, and whether you were a small ship owner or a big ship owner, you would get your loan on a mortgage basis. So the product that was the most used was ship finance mortgages, and that's what most of the lenders were giving. The problem in 2008 is that many of those banks, they lost completely their portfolio. I'm giving an example of the Royal Bank of Scotland. Was one of the main providers of ship finance worldwide, and they completely closed down their portfolio. What happened after 2008? So there is the before 2008 and there is the after 2008. As always, there are some people who want to fill in the gap, and there are many newcomers who came to the market. And those newcomers may be new banks, new credit funds, new institutions. They decided that shipping was interesting to them, and they started filling that gap. So today you have a two-tier market. There's a first market which is provided still by the big corporate banks, but only to the top 100 ship owners in the world. So if you're not part of those top 100, you won't get a loan. That's very clear. And then the second range of lenders, they are open for business. There is a lot of liquidity available. All of them are kind of fit to tailor process, so they cannot take every kind of ship owner. You need to find the right one. And there are many of them. So today, there is no problem in getting a shipping finance from a Western or US lender on a mortgage basis. What happened also is that the Chinese leasing companies started emerging. That's also prior to the financial crisis, but much more since then. And they have a model which is always the same. It's completely standardized. It's based on leasing. So this puts us back to the Gift City proposition. it's about ship leasing. And all of those Chinese institutions are giving ship leasing facilities to many ship owners. You need to have some size though. You cannot be too small. But this is what they do. And I think the future for this ship finance is that the big banks will not come back because they have regulatory issues, capital restraints. They are under the focus. They're not going to come back and give shipping loans. So we have to focus on the second tranche. And the Chinese also. I think that's also the way forward. And I think the leasing part of it is the new instrument that we need to talk about, because I was saying mortgages were the principal source of security for shipping finance. Today, leasing has emerged as a new instrument. I think before it was 80% of the market was mortgage driven, and now I would say it's about 60%. So 40% is leasing. And the leasing is very comparable to a mortgage. If you explain it correctly, it's the same mechanism at the end. You are still owning the ship, you're still operating your ship, and at the end you are still free to sell or to buy ships at any time. This Gift City initiative probably will give support to launching this leasing for shipping finance in the same way that the Chinese and even the Japanese are doing. So I think it's all a question of putting it together. And what I think is lacking in India, if I come back to India now, is that we need some banks to have a shipping specialized department where you have some people who understand the mechanism, who have a bit of history about the shipping, and can assess the volatility of the market and understand when it's good to land at a higher leverage and good to land at a lower leverage, because it's all about the cycle, right? So I think if we could get some of those banks interested in setting up a shipping department. I can give you an example. I mean, in Europe, we had some new banks coming in. They set up a shipping department from scratch. They just hired a few professionals. Then they put everybody into the Indian, learn to grow. And now it's handled by some professionals. And they are doing portfolios already $1 billion, $2 billion. If you can allocate some funds to this shipping initiative in Gift City, to some of those banks, I think it would be a very good start. Yeah.
Thank you, Regis. That was pretty smart. That actually brings me to state one incident that I had. I once met the Greek ship owner, and I asked him that why are you a ship owner? Why do you own ships? He said the next most fancy thing to being a James Bond is being a ship owner. So in fact, the sport of owning ships in India is picking up, I can see. So next, I go to someone who has been funding infrastructure projects for a very long time, and I want to ask him, Mr. Giri, the National Infrastructure Investment Fund. You have been investing in the ports and the port-related infrastructures, projects, logistics, and even in the projects like the National Infra Pipeline, the PM Gati Shakti and NLP and many others of that nature. So what have been the key principles that are driving these projects, and what are your learnings, and what are the kind of the playbook replications we can do for financing ships in India? And also, Mr. Giri, just to add a little flavor to that, you can also tell us what is the growth story that you see, the India's growth story.
Thanks, Madhvendra, and good afternoon to everyone. Pleasure to be here. Thanks for getting us here. So in terms of infrastructure, and again, it has been quite an attractive growth story. And if you look at what things have what things have played well for infrastructure, and we can potentially look at specific sectors. If you look at the renewable space there, three clear aspects. So one is just the whole origination aspect. So when you look at on the renewable space, there is a clear defined pipeline of growth, right? So today, when you actually look at SECI and TPC agencies, which are actually bidding out projects, there is a clear visibility for the next 12, 18 months in terms of the kind of pipeline that is going to be bid out. Second, the entire bid process is quite well established. And if you look at the norms that are followed, I think the best of international norms also have been taken into consideration in formulating those bidding norms. The documents are quite standardized. The power purchase agreements, everything is very standardized, and it is, at least of course, has evolved over the last 10 years or so. It takes time, right? But there is a phase of evolution that renewables has actually gone through. So if you look at it from an origination perspective, as a financial investor or a developer, you have a very good view in terms of how the next 5-7 years are going to look like. So if you look at the stated objective of Government of India, we're looking at scaling our renewable capacity from 150 gigawatt close to 500 gigawatt, which basically means on an average, we need to add 50 gigawatt. So if I'm an investor looking at that space and looking at that large an opportunity, you're able to really take long-term view. So that's one key aspect. If you look at the contractual framework, And again, I'm keeping renewables in perspective. From a domestic bank perspective, the contracts are quite sturdy, right? So in terms of their ability to, initiate a proceeding, their ability to actually substitute a sponsor, and in certain, if you look at certain transportation concession agreement, there's also a right that the banks have to substitute, right, which is a very strong right. So it's a process that can be followed without really going through the NCLT process. So it's a quite a comforting kind of a construct from a bank's perspective. We've also seen foreign banks participate in the Indian renewable space. And for them, I think that point is already made. One of the big comfort is adherence to the international arbitration rules and frameworks. So that actually makes it much easier for the foreign banks to participate. The other aspect, if you look at from a more, and again, this is, you may blame me to compare like apple to oranges, but the other thing that really works on renewables is the long-term nature of the contract. So there is a very objective framework on tariff, there's an objective framework on any change that needs to happen, any penalties that has to come into place. So it's really a very objective framework. And in circumstances, if there is a disconnect, there are forums that you can actually go for dispute resolution, and it's well established. So if you look at all the three aspects, whether it's, and similarly if you look at what are the outcome for force majeure or what are the outcome for change in law, some of those provisions are already incorporated in the agreement. So all these factors have really helped infrastructure financing, and if I just limit it to what's happening in renewables, today Indian banks are really funding anywhere between 75,000 crores to 1 lakh crores just on renewables, because that is the amount of capital that is required to scale up. If you're looking at adding 15 to 20 gigawatt, that is the amount of financing that's happening. It's all long-term financing. It's all driven by Indian banks and financial institutions. Of course, opportunistically, we go out and kind of, take foreign currency loan and bonds, but it's predominantly funded by the Indian banks. So that's on the first aspect. I think in terms of growth, and respected minister has really made my pitch very easy. She's already made some of the points. But if you look at it from a growth perspective, on a macro, today we are very well placed. If you look at the last decade or so, the nominal growth in India is close to 10%. And standing here, the expectation is that over the next 10 years, we should be able to achieve that kind of nominal growth. Just keeping it short, if you look at India's services sector, over the last decade, the share has actually doubled. So we were sub 2%, but currently we are 4.5%. I think there's no reason why the same could be replicated on the global product side. So today we are sub 2%, close to 2%. In the next decade, we're hoping we should be able to double that number. And if you look at the building blocks for that, on consumption, I think the demographic dividend works. Our median age is 30 years. 20% of the additional workforce is going to come from India. So that's a huge demographic dividend to have, right? So the dependency ratio is much lesser. We are actually very well placed on that front. That really augurs well from a consumption perspective. If you look at a per capita, we are at around $2,600. And that is a number where discretionary spend really increases significantly. So on consumption, we are very well placed. If you look at from a reforms perspective, whether it's the banking reform, real estate reform, if you look at the outcome, right, the ease of doing business ranking of India has improved significantly. If you look at the point that respected minister made, I think today the balance sheet of corporates, the net debt to EBITDA ratio is the lowest over the last decade or so. Our banks today are in a very good shape. So again, the numbers in terms of the gross, I wouldn't call them stressed asset, but the gross asset that needs some resolution is the lowest. So if you look at from even the strength of the balance sheet, whether it's corporate or Indian banks, we are very well placed. And just to make the last point there, so if you look at the last a decade or so, Indian growth has been significantly driven by services and the government capex. The government capex on infrastructure has been very impressive. I think the last 8-10 years data, if you look at, the CAGR on investment is 12 to 15%, which we have not seen any economy operate at that kind of a level. Standing today, I think the two engines that potentially will help us, and there's a lot of focus on manufacturing. There are 14 sectors where PLI has been activated. I'm sure you guys are aware of data on the electronic export side, right? We are doing great there. So if you look at from a next decade perspective, I think balance sheets are in good shape for private investments to happen. Most of our core sectors today are operating at 70, 80%, 70% capacity utilization. So there is capacity, there is private capex that is expected to come into play. And with the support that we are getting on the manufacturing side, I think those are the two engines that potentially will drive India over the medium to long term. So all that really augurs well from a global trade perspective, right? So that is where we stand, and the infra angle I can't sort of close without mentioning the infra angle. So if you look at from an infrastructure perspective, whether it's ports, roads, railways, significant capacity has been added over the last decade or so. And standing today with, again, NIP, NMP, there's a lot of visibility and a lot of interest of global investors, developers in India infra, which basically means if you look at from a infrastructure perspective, whether it's ports, railways, roads, multimodal logistic park, there's enough and more that's happening from a policy reform perspective, which is making attractive for investors to participate in that space.
Thank you. So all I see that is we have good balance sheets, but we just have to find a way around to see that how that fund goes into funding ships. In fact, I really can't believe that I'm already starting to get questions from the audience. So that actually brings me to something which I heard Mr. Amitabh Khan, the G20 Sherpa, say to me in the deliberations during G20. And I literally had to walk him up after the session to literally ask him, did you say this figure? So he actually said, $150 trillion are floating in the international market in banks, funds, private equity, venture capitals, alternate funds and everything. It's waiting to be invested somewhere. Do we give them a fertile ground, like be creating institutions like IFSC? Do we give them a fertile ground to invest? So that's what I now basically refer my question to Mr. Rajaraman. So sir, having said that, we have created the ship leasing framework, and in fact, as I showed in the slide, in the last 8 months, we have also had done many inclusions. We brought an amendment to the SEZ Act so that people can bring their ships who are registered in IFSC. 8 companies have already registered there. The growth story is really looking amazing. Now, how is the environment we are creating in IFSC is becoming enticing for the world to come and set up their finance centers in the Gift City? And also, how do we inspire people and the banks to basically move beyond the balance sheets and try and do asset-backed financing? So how can we in our frameworks, the policy frameworks, can basically bring this kind of improvements?
So thank you very much. So the Gift City journey is a little older than the Act of Parliament which was passed in 2019. So it started in 2014-15 with RBI, SEBI and other regulators supporting it under the directions of the government. Now after this 2019 Act of Parliament, we have our own regulation, and there are 30 regulations which have been created under this act, which includes banking, insurance, the capital markets, and pension is on the way. And we have also created frameworks for sustainable finance, for ship leasing, aircraft leasing, and so on and so forth. So the idea of IFSC is to create an offshore center within India. So basically the idea is to onshore the kind of India-focused business that happens in other places across the world, be it in New York or in London or in other places. So there is a great opportunity here because much of these financial services are migrated away from India because of the fact that there is a tax problem, or there is a ease of doing business problem, or there is a policy problem relating to the sector. So this is a great opportunity. While the domestic regulations would take care of the macroeconomic demands of the country, I think here is an opportunity where I think a small enclave will actually support a very, very different kind of regulations which are benchmarked to the best across the world, I think. So our regulations are simple, principle-based, and being unified in nature because it combines the functions of the banking, insurance, and the stock market regulators. It affords the opportunity of providing simplified regulations which cut across all these verticals. So therefore, from that perspective, I think that's where the start we have been able to take off from. And as a result of that, I think over the last few years, I think as Madhavendra mentioned, I think there is a significant traction in terms of the financial ecosystem within Gift City. I think already 26 banks are here, out of which about 6 are foreign banks. And they have already, the assets under management, I think in terms of the credit that has been dispersed through external commercial borrowings or trade finance, etc., has reached $47 billion. And we have about 68 alternate investment funds registered with the help of nearly about 74 fund management entities. And the total targeted corpus is about $18 billion, out of which about $4.5 billion has already been committed and $1 billion drawn down and invested into India. So the idea behind all of this, and we have an insurance ecosystem too. I think about 5 international insurance companies have actually established branch offices within the GIFT City. So today we have the opportunity of creating a holistic ecosystem for the ship industry here. So the 8 ship leasing companies have actually registered in GIFT City, and about 2 ships have been leased out. And I am happy to say that one of these transactions have been financed out of a bank in GIFT City itself. So it's not as if the things have not moved forward. There is appetite, GIFT being a global financial center. I think the regulations have enabled this financing to happen within the GIFT City itself. So our aim is to actually get the other parts of the financial ecosystem to work with the ship industry. For instance, we have an alternate fund industry. Currently, we don't have a specialist fund which focuses on ship financing. We'll be very happy if Aero Capital or the other kinds of fund entities come and look at the opportunities here and set up, I think, specialist entities which can look at ship financing. Let me also say that it is not just restricted to financial services, as some of my colleagues have already mentioned, and the Honorable Finance Minister also mentioned. The government has already announced, the Honorable Finance Minister announced during the last budget that arbitration services also would be launched out of GIFT City. So we have set up a committee which is drafting the regulations for putting in place, for enabling an ecosystem where arbitration services can be run out of GIFT City. And interestingly, my colleague here, I think Chong Lee Leong's entity, Singapore International Arbitration, has already a representative office. And we're looking forward, as disputes build up or something like that, I'm sure that SAIC also will get operationalized. And we look forward to other international arbitration firms and mediation and conciliation entities also to set up shop within GIFT City. So we have a very facilitative regime, and will be fully supportive of any requirements to move the regulations to support very active onshoring of all these leases which are happening across the world. So today morning we had a roundtable, madam, I think, and a very active interest has been shown by, INSA and the other ship leasing entities have participated, and they are very keen to actually look at GIFT City. Very large companies have actually filed applications, and we look forward to actually supporting them. And as you mentioned, there's a lot of the financing which is out there. But I think the question is that how we can move our needle to reach the best. And I am also thankful to the Shipping Ministry, which recently released a gazette notification enabling pushing up GIFT City in the right of first refusal order of priority. So now we are at number 2 below the Indian-built, Indian-owned ships. So this all this will add to the gravitational pull towards GIFT City, and we hope to support the entire shipping industry, not only in terms of leasing but also in terms of arbitration services and other kinds of financing, including equity financing down the line. Thank you.
Thank you, sir. Sir, may I request all the panelists to kindly limit their speeches to only 3 minutes. We're running out of time. Nick, that brings me to you. London, in a sense, has been very iconic when it comes to insurance and the reinsurance. And as you are basically leading the international group of P&I clubs, as an organization of the P&I clubs, including non-UK P&I underwriters, basically from Japan, US, China, Singapore, and Germany. So how is the global shipping being insured and reinsured? And how does it help to have a union of this sort? And how can Indian ship owners basically utilize these facilities? And also, just to add a little flavor to that question, how do you find the Indian flag as a jurisdiction when it comes to insurance?
Thank you very much. Thank you, esteemed Minister, and thank you to Global Maritime India for inviting the international group to speak today. I think before I answer your questions, it's probably sensible to explain to the audience a little bit about the history of P&I. So P&I essentially started with groups of ship owners who were looking to insure third-party liability risks which they were facing around the world. What do I mean by third-party liability risks? Things like pollution, wreck removal, passenger crew claims, and a multitude of other claims which they were facing. So they came together to mutually insure on a not-for-profit basis those risks as between themselves, sharing those risks over the years. The international group started in 1899, and was where the risks got so big for one individual P&I club that they wanted to share those risks more widely. So over the years, that's grown so that we are now 12 international P&I clubs, all competing against each other for business from ship owners around the world, but coming together to share the largest claims. The largest claims are those above $10 million per incident per vessel. And as between the clubs, they share those up to $100 million. And then we go out and we place the largest reinsurance contract in the world with 70 global reinsurers for cover up to $3.1 billion on any claim. So the main purpose for the international group remains the same as it was in 1899, which is the sharing of large maritime claims. However, because of the collective strength of the group, we also have developed two other purposes. First was to come together or send experts who come and meet at our office to discuss the big issues in shipping. Things like sanctions. The esteemed minister mentioned the geopolitical issues that the world is facing at the moment. Well, someone has to understand what those regulations are and to give guidance to ship owners, and that falls on the IG Secretariat team and others who are experts on sanctions to speak to the regulators at OFAC, DG FISMA, and OFSI in the UK to really understand what they want from ship owners, and then to give guidance to ship owners who then make the commercial decisions as to what to do. Then we also get involved in all aspects of safety, and we're forever trying to improve standards across the ship owning community and help ship owners where they encounter problems when they trade around the world. And as part of that, we provide certificates of financial insurance to ship owners and their flag states to be able to trade easily in and out of ports around the world. They're also known as blue cards. So the blue cards that the IG clubs provide enable trade easily in and out of Indian ports. And that is a vital thing that the IG clubs do, and it's we have a voice at IMO, and I'll talk very briefly about that as well. So the third purpose of the group really has been to act as a collective voice within the industry at places like IMO, which is the UN body for shipping based in London, along with a lot of the other international shipping organizations. And there we have the global regulatory framework for ship owners and shipping generally is based there and promulgated with all governments, maritime governments present there. And we have we're probably the most active NGO on liability issues at IMO. So in that way, we try to ensure that there is a fair framework for the ship owners to go and trade around the world with the other parties interested in shipping. And it's also fair on the maritime states as well, so that we will reimburse on third-party liability issues correct claimants when they bring their claims. We will try to do that as quickly as possible. So there's a huge amount that goes on within the international group, and each of the clubs in the international group sends its representatives to help to participate in that work. So that's sort of how we operate in practice. And I within India, bring it back to India, we have a wide framework of correspondents who attend our events where we have them around the world. The next one is in Hong Kong next June, to understand the framework within which we're trying to work and to keep global maritime trade moving. We're just one aspect of global maritime trade, but I hope that we're an important one. The importance of India is only growing. Of the large maritime economies, clearly India is growing quicker than almost any other leading economy at the moment, and as such it's going to become more and more important in the global trading sphere. So we see ourselves, and it's fantastic to come here today and to listen to all the energy and drive that's going on. So thank you for the invitation.
Thank you. Now, in the interest of time, I would like to give little allowance to all my speakers. Now the time is 2 minutes 45 seconds, please. So that brings me to another eminent person from London. He is in fact the first Indian to be in the board of directors of an international P&I club. Mr. Mehta, what's your London story? And do tell us and our audience that does India really need a P&I club? And how are these clubs created? And just a little flavor to your question is that how do they compare with the agencies which are giving fixed premium P&I clubs rather than the collective ones?
Namaskar. Thank you very much, and no pressure at all. If you look at the first slide, that puts things in context, how the world seaborne trade estimates have gone in the last few years. And the next slide shows us what the world tonnage is, where are different countries and where is India. We had the CEO conference day before yesterday, and the shipping secretary very elegantly and very mentioned that yes, they are fully aware of where India stands in shipping, and provisions are being made to expand the Indian shipping. Now, putting things in context, what Nick mentioned about the mutuality, no profit making, and P&I clubs which are mutuals. Now, creating a mutual is something what we have to look at. But before we reach that, this is what the international group contract is, 10 million, 100 million, and then collectively buying for the 12 clubs a cost-effective reinsurance program. So basically, this is what the current ship owners, whether they are from India or international, enjoy this benefit or are part of this whole system. With the current size of Indian fleet and where we are going in the future, that becomes a very important ingredient for setting up a insurance, I won't say a mutual, but a insurance hub in India. We have to ask ourselves, if we are looking for change, is it going to be equivalent to what ship owners are having? Is it going to be better than what we are promising them? So those are the two very important questions. P&I clubs are financially regulated. The clubs are S&P rated. For example, North Standard is an A-rated club, has a free reserve in excess of 725 million. The total tonnage is 250 million gross tons, and added with chartered is about 350. So those are the numbers we are talking about. And the international group, the 12 clubs' collective free reserves to deal with these big claims exceeds $5 billion. So that's the challenge we have. And in addition to that, it's not only that we, as P&I clubs, provide insurance, we are the service provider, as Nick mentioned, whether it's sanctions, whether it's fuel, which are alternate fuels, or whether it's a legal structure, legal advice, we are there. We employ, as North Standard, 750 people. So we have got an infrastructure in place. So what do we need to do? With the current size of the Indian fleet, we need to win minds and hearts of the international market. We need to grow so that people have confidence in dealing with insurance hub or whoever is available in India. Unless we create that, what are the chances of going forward remains a question mark. We are there to work with. We are having a lot of discussions with the Gujarat Maritime Cluster and board. How can we help them in training? We have had discussions today with DG Shipping, how to handle large casualties, what trainings we can provide, and Nick will probably dwell on it if we get another chance. But those are the challenges what we have, and we have to be realistic. We have to start somewhere, I agree, and definitely we have to start somewhere to form an insurance hub and take it forward. Thank you.
Thank you. Thank you, Mr. Mehta. That's pretty insightful. Now that actually brings me to the most critical aspect of all the contracts, actually. And I'll tell you very honestly, in most of my interactions with the people, stakeholders, one thing that emerges as the biggest challenge for doing business is about enforcement. Everybody talks about enforcement. So now, even in the new Admiralty Act, the Article 4 has actually described, basically in parallel with the international conventions, the 23 types of claims that can be adjudicated under the Act. So I now basically go to Justice Gupta, who is heading the India International Arbitration Center. Sir, private adjudication, what we call as the alternate dispute resolution mechanism, both arbitration and mediation, which has the force of the law basically to enforce. So with the new institution, that this is a federal institution which has come up in Delhi now, the India International Arbitration Center, how are we looking at resolving this problem? And also, most importantly, even if we go through this whole adjudication process, but ultimately come to an enforcement of award again in the court process and go to the litigation way, so how do we think that we can basically mitigate this problem, and how is the India story emerging with IIAC?
According to me, there are three stages in the arbitration. Appointment of an arbitrator, then pendency of arbitration proceedings leading to award, and secondly, execution. The law as stands today is not very arbitration friendly. The courts appoint arbitrator, and courts have their own problem because there is a huge pendency of appointment of arbitrator. I understand that in some high courts, there are more than 5 years time is taken for appointment of an arbitrator. But in the other jurisdictions, it is only the institutions who appoint arbitrators. There are multiple issues why institutions were not designated. We followed UNCITRAL model of arbitration way back in 1996. We copied it exactly word by word. Even the word Chief Justice was used, which was not the prevalent practice in India. It took about 15 years, 20 years to amend the word Chief Justice with the word High Court or the Supreme Court. The problem is appointment of an arbitrator. The institutions should appoint an arbitrator. There are not many. Ours is the only statutory authority. India International Arbitration Center is the only statutory authority. Rest are voluntary efforts. Some are court annexed, like Delhi International Arbitration Center is managed by Delhi High Court by the sitting judges. Then there we have in Mumbai Center of International Arbitration. It's an effort of few individuals who have done, who are doing reasonably well, but competing Singapore or other jurisdiction is a big, tall claim. I attended 2 conferences last year. One was by Singapore International Arbitration Center, another was by ICC, International Chamber of Commerce, Paris. Both were eyeing the growing market of India that Mr. Chairman, Mr. Devinder Singh was addressing the audience. He said that India is growing at the rate of 30% and we want to establish, to gather the clientage from that. We are missing that circle, that growth. There are multiple issues. Firstly, as I pointed out, law is one issue. Then during the pendency of arbitration, it is ad hoc arbitration. Mostly retired judges act as an arbitrator. There is not an expert pool of arbitrators to decide particular issues. In fact, we entered into a memorandum of understanding with Royal Institute of Chartered Surveyors, London-based, 150-year-old association, which deals with only infrastructure and construction arbitration. Because we have a limited pool, we entered into MOU that in case of any issue, you will provide us the arbitrators. They have agreed to do that. That is the second stage of arbitration, where the ad hoc arbitrators. The difficulty is ad hoc arbitrators, there is no provision for fee or the timeline. In 2015, the act was amended to put the fee schedule, cap on fee schedule, and the timeline. But the mindset is still not going out of claiming fee as the arbitrators feel like. After the award is given, the more difficult part is the objections. Section 34 of the Arbitration Act has very interesting objections. One objection to set aside arbitral award is in conflict with public policy of India. What is public policy? It should be more defined, more specific about it. Then there is another, if it is affected by fraud or corruption, or is contravention with fundamental policy of Indian law. So all these grounds of challenge are vague, which gives courts takes time. It becomes subjective, that one particular bench takes a particular view, the other bench takes a different view, and the correction takes a lot of time. All these things are required to be settled at an early stage where the objections are dealt with expeditiously in a faster way. And then even if objections are finalized, there are 3 appeals. First is Principal Court of District Judge, then the High Court, then the Supreme Court. It takes, to be conservative, decade, if not more. Then after the objections are decided, then comes the stage of execution. Execution again goes to the civil court. Again, there is a timeline. There is a committee constituted to review the Arbitration and Conciliation Act by the Ministry of Law. The former law secretary is the chairperson. One of the suggestions given is that we should have a summary execution of the awards, like Schedule 2 of the Income Tax Act, which provides the right-of-way sale, except in a particular manner. That Schedule 2 is even adopted under the Debt Recovery Tribunal Act for recovery of the dues by the banks against the debtors. Even those provisions will help in making it more effective, so that the confidence of the investors. Now, if India is growing economy, we will get investors from all over the world, but are we able to provide them an expeditious disposal of their claims or disputes? That is an issue which we have to be future ready to amend the law, to streamline it, so that we are able to build up that confidence in the minds of the investor public.
Thank you, sir. Thank you. I'm not going to really touch upon the public policy and the fundamental policy, because that's the armory of the lawyers. They'll run away otherwise. So I actually want to speak with you, sir, Mr. Krishna, who's heading the Conciliation and the Settlement Committee for the major ports. Sir, what is the mandate of CSC, and what kind of disputes are you basically seeing there, especially with respect to the port infrastructure, which are capex heavy disputes? So how is it being resolved? How do you compare yourself with the traditional ADR ways, sir?
Yeah, Madhvendra, thanks a lot. Madam Finance Minister alluded to 2 World Bank rankings reports regarding logistic index and shipping connectivity index. I would start with another index, which is a bit forgotten now, because the World Bank stopped releasing it in 2020. But that's a very important index which have been comparing 119 countries across 10 indexes on ease of doing business. And again and again it has been said, if you see the enforcement of contract index, it's stuck up, laggard. We are amongst the worst. It has always remained within 175 to 165. And that actually triggered in Government of India. There are 2 big changes that happened in 2016. Madam mentioned the IBC code, the insolvency and the bankruptcy code, which actually has transformed the entire exit mechanism for companies. And another important change that happened in 2016 was the cabinet decision. To boost up the construction sector, the cabinet said, please engage, and what Justice Gupta just alluded again mentioned, that why don't we engage experts in conciliation and mediation? In fact, the Conciliation and the Mediation Act provided for a whole mechanism for conciliation since 1996. 2015 Commercial Courts Act was a step forward also, it also mentioned, but it was lying dormant. 2016, that cabinet decision actually started making some, at least infrastructure sector departments, ministries to think about it. And Port Ministry and the Highways Ministry was the first setup to create something called conciliation committees of independent experts. And I'm going to quickly tell you this mechanism, these two ministries created this mechanism, about the mechanism in the Ministry of Shipping looking after the major ports. It's a very innovative and unique mechanism. First, just as Gupta mentioned about the high cost of arbitration, and I must mention international arbitration, Madhven, the first hearing itself cost something like $15,000 US. Second, it goes exponentially, the cost goes exponentially. In our case, what we decided was that we said we will make our mechanism success fee based. No fee, no sitting fee, nothing until unless you succeed in creating a settlement between parties. When parties are able to settle their disputes, sign a settlement agreement, only a fee gets paid. Second important thing was that the fee was not based on disputed amounts. The Act itself creates a fee based on the disputed. So if there is a dispute of 1,000 crores, fees is paid on 1,000 crores. But if the resolution takes place for 10 crores, we said no, the fee should be based on the resolved amount, which is 10 crore, not on 1,000 crores. So these created very, different mechanisms for resolving disputes. No forum shopping. We don't have any panels. The ministry created a panel of 4 conciliators. They are fixed across all disputes. Disputes keep on coming to us and we are resolving. Now, obviously, this mechanism started in late 2021. It's just about 1.5 years. We already have a big number of cases, big boost to this mechanism, 51 cases. And friends, the total number of cases pending at end of 2021 was about 250 to 300 crores, involving about 15,000 crores. Out of those cases, 51 cases from all ports have already been referred to this committee. In 16 cases, 17 now, we have already signed settlement agreements involving maybe about 1,700 and 1,800 crores. 13 are in final stages of settlement. 22 are in process. We have still not seen a dropout where we can say we will not reach a settlement. So that is the amount of interest. And obviously what required was that we had to create credibility. 3 of our members carried the legacy of government, and that baggage had to be first done away with. And once that baggage got dropped from this committee, when the private sector actually industry actually saw that they're getting fair and equitable results, then there is a huge rush to settle disputes through this mechanism. If you can just now. Again, this whole delay, last slide, I will just mention about the delay. We did a quick analysis. We have settled 16 cases. What has been the time, taken to settle those disputes, Friends, if you see from this chart, the total time for these 16 cases, the litigation was pending for 88 months, which is about maybe just 7 years, 8 years. That was the average. It has taken, on an average, just 8 months for final settlement to take place. Out of this 8 months, 2 months have been taken to actually write a settlement agreement, and 1 or 2 months has been taken for the ports to actually approve in their board. So the settlement mechanism actually has just taken 4 to 5 months. So from 88 months on an average, it takes for a litigation they were pending, still not finalized, 7 years, 8 years. In flat 8, 9 months it has happened. The next level of cases that we are taking are cases which are pending since 2003 in high courts and with the arbitration awards. And then we are quite certain that in the next time we'll be able to resolve those cases.
Thank you, sir.
Thank you.
Very insightful, in fact.
Thank you.
That also, I was just speaking with someone day before, and he told me that all disputes are going to LMA. First thing you have to do when you go to LMA is 5 lakh rupees jama karo. I said, now actually both the ad hoc and the institutional way for maritime dispute resolution, GMC is doing the ad hoc way, and the GMAC, Gujarat International Maritime Arbitration Center, the first maritime arbitration center in India, is doing the institutional maritime arbitration now. That now brings me to the most important, the most emerging institution, that Singapore is actually emerging as the most choice or the preferred seat of arbitration. So Mr. Leong, disputes and insurance for ships and cargo, civil disputes also involving the ship owners, seafarers, passengers, and other things like regulatory things like registrations, licensing, and inspection. So how do you think is international arbitration basically permitting the regular flow of maritime trade? And as a jurisdiction, what is it that you're doing differently which makes you successful? And also you have SCMA, which is for the maritime. So SIAC is also doing maritime. So how do you compare yourself with respect to rules, and how should, basically what lessons can be learned from there?
Yeah, thanks very much. And first of all, I'm going to thank the organizer for inviting SIAC and myself to come here and talk. Thank you very much for that. And how do I answer that question? I think I answered the question by saying that, first of all, I think arbitration was in fact developed for maritime dispute. Why do I say that? If you look at history, going back 2,500 years ago in classical Greek, they have already records of arbitration being used to resolve maritime dispute. There was a reference to a case where there was a shipwreck and there was a dispute over carriage of goods, and it was referred to arbitration for resolution. And traders in those days were already using arbitration to resolve their dispute arising from trade at the Mediterranean Sea. And why is that? Why do people go for arbitration instead of, let's say, going to the national courts? Because, you know, when we have a dispute, the first thing you think about is to go to the judge that's been appointed by the government to resolve your dispute. But traders prefer arbitration. And the reason is because, frankly, in trading in maritime is actually the most often and usually the first time you encounter people from different jurisdictions, different nationality. And that's where the complication comes about. Because whose national court do you go to? Do you go to my national court? Do you go to your national court? Or the national court where the accident happened? And they were looking for a neutral forum to try to resolve the dispute. What best neutral forum is but arbitration? That's where you get to choose your own arbitrator. Let's get to my next step, which is that in trading and maritime, you actually have developed very, very niche custom and practice, which are not peculiar to any particular jurisdiction, but this is a custom and practice that is practiced by all maritime traders that cut across the world. And they have got very specialized knowledge of how things are done. And if you get arbitrators who have got this niche knowledge, then it makes the resolution so much faster and so much more efficient. So that's the thing. So you have neutrality, you have specialty, and most important to me is quick and fast and easy. You have it done immediately, okay, and you resolve the dispute very quickly because traders need to get on quickly, particularly if your commodities is perishable goods. You need to have it resolved very quickly so that you can carry on. So those are the features that made parties go for arbitration to resolve their maritime dispute. Now, fast forward 2,500 years now, I think the demands of the modern society is not that different. We are still looking for neutrality, we are still looking for specialty, and we are still looking for fast and cheap, actually. Now, the last one, I'm going to deal with it later because it's becoming increasingly challenging for that, but neutrality is a non-negotiable thing. And that's why you will find centers like in Singapore, for example, we are well known for neutrality because we are a small state, okay, and we are traditionally have been a trading nation for centuries. We have been trading with the whole region, we have been trading with the whole world, and everybody knows Singapore as a very, very dynamic maritime nation. So neutrality is a given. And because of our history in maritime trading port, we have developed a very deep pool of experts who can be appointed as arbitrators. In terms of fast, I think arbitration is still relatively fast compared to some national courts. You can have your dispute resolved in between 12 to 18 months. But I think the cheap part is getting a bit difficult. I think like Justice Gupta said, international arbitration is becoming expensive, right? You have to appoint your lawyers. And the problem is that disputes are getting more and more complex because our day-to-day interactions have become more complex. Contracts have become much thicker. You see your contracts, they are this thick, right? And therefore, to resolve it, you have to engage lawyers who will spend long, long hours just going through the contract and going through the facts. So, the arbitration institute in the world are actually trying to face these challenges. SIC, ICC, I think we are all trying to face these challenges, trying to contain costs. We're trying to devise procedures, like expedited procedures, to make sure that it gets resolved quickly so that it can get done at a cheaper cost. We have scale costs to make sure that the arbitrators do not charge too much. And we have our registrar to at the end of the arbitration, to review the cost of the arbitrator and then decide what cost the arbitrator should be given, depending on how much time he has spent in the case. So those are things that we have done in terms of trying to facilitate the resolution of dispute and to make arbitration an even more attractive procedure for resolving disputes. Now, Mavendra has asked me about SCMA and SIAC. What is the relationship between the two? I think if you look at SCMA, SCMA is a institution that deals particularly with maritime arbitration. But if you look at it, it is actually an ad hoc arbitration. That means that SCMA does not administer arbitration. They have SCMA rules, which is basically an ad hoc rules, but they do provide appointment of arbitrators if the parties could not agree on arbitrators. But other than that, they do not administer arbitration. Whereas SIC is an institutional arbitration. We actually administer arbitration. And in our administration, we make sure that the parties are not bothered by fees in the sense that we will take care of collection of deposits from the parties and make sure that the arbitrators' fees are taken care of. We also try to facilitate a fast resolution, so we actually try to make sure that the tribunal gets going very quickly. We also appoint arbitrators, so we ensure that you have a neutral tribunal to begin with. So that is my very short question. I know we are running out of time, so Mavendra, I'll pass it back to you.
Thank you so much. So actually, I wish we could continue, but I'm also duty bound to conclude this panel because we have a valedictory session waiting. So with that, this has been really very, very enriching and immensely enriching for all of us. And I now basically hand over to MC to basically take the proceedings forward, please.
Thank you. Check. Thank you very much to all the esteemed dignitaries and certainly to Honorable Minister for being so patient and sitting with us through the entire session, and to our moderator for seamlessly managing this panel so very well. Let's move forward due to the paucity of time. Let's march past and express our thanks through the token of appreciation, through the presentation of mementos. Please join me in welcoming Mr. T.K. Ramachandran to give away the first word of thanks. My apologies, the memento to Mr. Gopal Krishna. Justice Shri Hemant Gupta ji. Mr. Savraj Mehta. And Mr. Regis Case. Thank you, sir. And now I'd like to invite Mr. Rajesh Kumar Sinha to give away the next set of mementos. Mr. K. Rajaraman. Mr. Chong Yi Leong. Mr. Nick Shaw. And Mr. Vinod Giri. To give the concluding remarks, please join me in welcoming once again on the dais, Mr. T.K. Ramachandra, please.
Honorable Finance Minister of India and all the distinguished panelists. It's my proud privilege to thank the Honorable Finance Minister for having set the tone for this session and given us a very brilliant overview and a profound insight into the entire sector from the national perspective. Thank you very much, Madam. It is not often that all of us get to meet or listen to the finance minister in person, so we deem it a great privilege. All of us deem it a great privilege to have been part of this session. This session should actually have been called Finance, Maritime Finance, Insurance, and Alternate Dispute Resolution. Maybe not just arbitration, because it should have included mediation, conciliation, and arbitration. And there is so much to discuss. I mean, it's like the 7 C's trying to be distilled into one small cup. So I think next time we'll have separate sessions. So that will make it, instead of 31 sessions, now we'll have to have 33 sessions. And I still will have a lot of people. There are a lot of people waiting outside, a lot of people watching this session live. So I'm really impressed by the kind of interest there is in this very, very complex topic. And again, I'd like to thank all the panelists, other than the also the members of the audience for having participated in this session with so much of fervor and so much of interest. And the large 3 or 4 points that have emerged. One is the pool of skilled professionals that are required in India to navigate the intricacies of maritime finance. Number 2, on the establishment of platforms that unify financiers and seekers. And thirdly, establishing reinsurance capacity pools, and also exploring the establishment of P&I clubs in India. As you know, the shipping sector is a very complex sector. There is someone who owns, someone who finances, someone who insures, someone who charters, someone who manages, someone who staffs, and someone who operates. So the very huge, very complex chain. And then there is the building chain, where someone who builds, someone who flags, someone who repairs, and someone who recycles. So because of the large number of stakeholders in this chain, I think the complexity increases, and therefore the need for a session of this kind. So I thank all the panelists for having given us the benefit of their brilliant advice and their brilliant suggestions to make this sector more vibrant in India. We'll continue this discussion and hope to continue to receive the benefit of your suggestions in future also. Thank you very much.
Check. Thank you, sir, for giving that concluding remark. With that, for the vote of thanks, please join me in welcoming the moderator and the co-convener of the session, Mr. Madhvendra Singh, CEO, Gujarat Maritime Cluster.
It's my privilege to deliver the vote of thanks. Heartfelt gratitude to Honorable Minister for chairing this session and sharing valuable insights, particularly private participation and PPPs for the ports and maritime infra capacity, for the capacity to underwrite maritime risks and growth of Indian tonnage. I thank esteemed speakers for the magnificent panel deliberations. Best part is that we have received some very insightful, actionable recommendations to work upon that will carry forward from here. I thank convener and co-convener for putting this together and delivering it with an impact. And I thank the organizers and the coordinators, the event management and the support team I would also like to acknowledge and thank our Secretary, Ministry of Port and Shipping Waterways for being here. It's a privilege to have him also with us. And my deepest gratitude to all the participants, all of you who have overwhelmingly wanted to participate, and for being here, and for active participation. Unfortunately, I couldn't take many questions, but it was good to have you all here. We can actually take it forward offline from here. Finance, insurance, and arbitration is the triad of essentials to build a robust and thriving maritime industry, and we all got to put it together. Thank you. Jai Hind.
Thank you, ladies and gentlemen, and all the delegates. If you haven't collected your kits yet, I request you to please collect it from the registration counter by showing your badge. The delegation kits are at the registration counter. Please show your badge and collect it from there. Thank you very much. Thank you, ma'am.